Hi guys, my name is Jasmine Robinson and I currently work as a banker. I've been in the industry for 10 years and my role is to educate clients and provide products and services to help them reach their financial goals. And so some of these goals center around home ownership, expanding their business, planning for retirement, consolidating debt. But the main thing is that the majority of my requests center around credit. And so having good credit will allow you leverage that cash simply won't. So by the end of this video, my goal is that you understand why you have to have good credit and the importance of maintaining that good credit. So the first thing a lot of people say to me is, I don't really need credit. I don't care about having credit. I have cash. We're going to hold that thought. So cash is good for, purchasing vehicles, purchasing houses, a bunch of different things. But credit is no longer used just for underwriting purposes. Nowadays, credit is used for job opportunities. Those high security clearance jobs, you have to have good credit. It's used for insurance premiums. So you may be paying much more a month on your car insurance because you have bad credit. It's also used for determining deposits. So rental deposits to find a house for you to rent or an apartment to rent. They're going to run a credit check. And the light company, the water bill, those people, if you don't have good credit, may require you to put $100, $200, $300 down just to get those utilities cut on. So you're right. You can use cash. Cash is king, but credit is going to be power. Credit allows you to leverage yourself and help build generational wealth and things of that, and save you money, save you time. At the end of the day, you're just going to pay more by simply having cash. You have to have good credit. Some of the most successful people in the world still have credit cards, and they still have credit that they use to make purchases because they understand the leverage that credit allows you to have. And so we kind of need to look at what lets you have good credit. How do you get to the point where you have good credit? Good question. So we need to look at your credit report. This is actually your credit report card. So it kind of, we say, is your debt report card. It looks at the main three things. It's going to look at your history of your credit utilization, or like your debt you already have. And it's also going to look at your payment history. Those are three of the biggest factors. There are 3 reporting credit agencies. There's going to be TransUnion, Equifax, and Experian. All of them kind of weigh things differently, but those 3 things I discussed, those are going to be huge impact and huge factors for all 3 credit reports. The good news is that you can actually pull your credit report annually, and usually I suggest every 4 months pulling one of those 3 credit bureaus so that you can ensure that there's no inaccuracies being reported, and again, if there was one, that it was actually corrected. Now, right now, due to the pandemic and there's an increase in identity theft, those credit bureaus are actually allowing you to look at your credit report weekly. So again, freeannualcreditreport.com. You can go there from now to April 2022 and actually review your credit report and look for any inaccuracies and make sure that everything is correct and things are moving in the right direction. And so again, we got the credit report, so now we kind of got to look at the score. What makes a good credit score? So most lenders use what's called your FICO score. So 90% of lenders look at FICO ratings. This is a range from 300 to 850. And so based on your rating is how you will qualify for loans and also the interest rates that you actually pay. So again, if you don't have good credit, you're going to be paying more for the exact same products than somebody that does, because you're going to be stuck with a much higher interest rate. And so when we look at scores, we kind of need to figure out where you are in that range. So below 580 has you at a poor credit rating. The next one is fair, 580 to 669. Good is 670 to 739. And then 740 to 799 is very good. And then we get to the 800 club, which has you at exceptional credit rating. That's the goal, ladies and gentlemen. We all want to be in that 800 club. 850 is a perfect credit score. And although we don't need, an 850 to do things, the higher the credit score, like I said, the more leverage that you have. And so a good idea of this is that right now we are at historic lows when it comes to mortgages. So I have clients, doctors, they have a lot of money. Like I said, they have a bunch of cash, but they would rather have that money working for them in investments and mutual funds, things of that nature, have that cash actually growing if something was to happen, and finance their houses, because that money is going to work for them. They're going to get a better return on that because their interest rate is only 2% versus, again, a 6, 7, 8% on the investment side. So they're using that credit, to work for them and financing things, because at the end of the day, they can afford to pay it off. But like I said, right now, they have that money in other vehicles that's earning them way more money. So there's really no point in them paying it off. The same thing goes for, big corporations. The reason why they do lines of credit and they purchase equipment like that is because, again, they are leveraging their cash and saving for emergencies. If you take all your cash to pay everything off and then we know life happens, you have nothing to fall back on. So you need to be able to make your payments, because, again, that is going to be one of the highest things that the credit report looked at, is your payment history. You have to be able to make your payments. So if you take all of your cash and this life happens like we know it will, your car gets totaled, the house, the HVAC goes out, what are you going to do then? You need to borrow money. I have seen, as a result of this pandemic, people with money and people with good credit, they were able to leverage during this time. So they were able to get short-term loans, while they were not working right now, or maybe they had a dip in their income due to other factors such as childcare, things of that nature. So they took some short-term lending. And again, the bank offered them options such as, they could actually skip some payments because they had good credit history with us. And, it didn't count against them. Of course, it goes on the back end of the loan. But again, they have this leverage where they're able to, in the meantime, use their credit, have a credit card, have a line of credit to make purchases that cash just wouldn't allow you to do. And so my point, again, is that you have to have excellent credit in order to, move forward in life. Debt consolidation. If you have smaller payments and you can consolidate all those outstanding credit card debt, you'll be in a much better position. So whether it's establishing credit, whether it's rebuilding credit or maintaining credit, you need to make sure that you're always working towards having those high credit scores. Now, a great resource I did find is at the ftc.gov. They actually have, no matter what stage you're in, resources there for your credit. And one of the key things I want to point out is that a lot of times they have these credit repair agencies or places that will help you with your credit. You don't need those places. Okay? Anything that those people can do, you can do it yourself for little or no money. FTC.gov literally has disputes, sample letters, all the phone numbers and addresses to the credit reporting agencies, and you can do all that stuff yourself. So, like I said, you want to make sure that you're keeping this good credit and that you're on top of things and monitoring things so that, again, when the time comes up, you can use your credit to leverage better opportunities. So, to sum it all up, like I said at the beginning, cash is king, but credit is power. Please understand that your credit allows you leverage that those with, low credit scores or no credit at all aren't able to take advantage of. So no matter what stage of credit you're in, you need to understand the importance of working towards having a high credit rating. Pay attention to those credit reports, monitor it, know that 1 in 5 consumer reports actually do show errors. So, use the FTC checklist to ensure that everything is reported accurately. My goal is that you now have a greater understanding as to why you need to keep good credit. Thank you again for your time. I appreciate your efforts, and I hope everyone is working hard and striving so we can all be a part of that 800 club. Have a great day.